The views expressed on this program do not necessarily reflect the views of this station. Proper advice depends on a complete analysis of all facts and circumstances. Listeners should consult their own financial advisors or conduct their own due diligence before making any financial decisions. Securities offered through Western International Securities Incorporated. Member FINRA SIPC. This is Financial Myth-Busting with Don Bennett, where politics and the economy intersect.
And this is Don Bennett. Welcome. We've got a great guest at the bottom of the hour. I'm just going to open up with telling you what you're going to be getting. She is actually an ex-plunge protection team whistleblower. And she's going to go into description about that. But her comments, she's got a new book out, and she's got this great quote that's part of the book. And she basically said governments control the stock markets, and there's absolutely no price discovery anymore. And you want to stay tuned for that. She's going to be here at 10:33. It's Dr. Pippa Malmgren. And her new book is called Signals, The Breakdown of the Social Contract and the Rise of Geopolitics. But this lady's a whistleblower on what goes on in our markets, and I think it's important for you to listen. It's something we've talked about over and over again. So I do think this is going to be one of those shows where you need to strap on your blood pressure monitor and just fully prepare yourself for full-fledged anger and annoyance about what's going on in our economy and our markets. And again, I do think you're going to be feeling some blood-curdling exasperation, especially when I go through some of the economic data that came out this week, which was pretty bad. I mean, it was really ugly stuff. And of course, the markets didn't respond to it because, to Dr. Malmgren's point, the governments are controlling the market prices. And what she means by there's no price discovery anymore, which means that there aren't free markets anymore. So there's going to be a few quotes that I'm going to be reading to you from some pretty large money management houses that basically say if this continues, active money managers are going to be out of business over the next 3 to 5 years, which is going to be unfortunate. But before we get started, I do want to remind everybody that I've got a stake seminar actually coming up this Thursday night on March the 5th. That's 2015. It's at 7 p.m. at the Capitol Grill in Chevy Chase, Maryland. I know other people have asked me to come do this in different states, and we're in the process of considering that. But right now we're going to do this one. Again, it's at 7 p.m. at the Capitol Grill in Chevy Chase, Maryland. And my subject is the surreal and sinister markets of 2015. And I hope you can come and join us if you're in the area. And if you want to come, you're going to have to call and make a reservation. We have only so many seats because it is a dinner. And give us a call at 866-286-2268. That's 866-286-2268. And again, this is for the stake seminar, where I'm going to be talking about the surreal and sinister markets of 2015. And it's Thursday night, March the 5th, and it's at the Capitol Grill at 7 p.m. in Chevy Chase, Maryland. And again, you've got to RSVP, so give me a call at 866-286-2268, and somebody from my staff will give you a call back and confirm. I sure hope to see you there. It's always nice to be able to meet the listeners who support the show for all these years. And I love hearing what's going on in your lives, in your fiscal life. So just make sure that if you can make it, try to do it. Give us a call. Again, the RSVP number is 866-286-2268. And yes, we are live today. So if you have any questions about your portfolio, all you have to do is give me a call. I've been a financial advisor for over 30 years. I've seen a lot. Certainly what we're experiencing in the last 6 years is new and different. But I got to tell you, my team and I, Bennett Group Financial Services, certainly tries our best to keep ahead of everything that's going on to make sure that our clients are set up appropriately for the new world that we're entering in, the new economic era we're entering in, because the rules of the old market and the rules of the old economy seem to be misplaced. And if you don't have time to give me a call today, you can always go to Financial Myth-Busting on Facebook to ask a question, or Don Bennett F&B on Twitter, or you can just email me the old-fashioned way at bennettgroupfinancial.com, and all you need to do is click on the Contact Us in the upper right-hand corner of the page, and we will answer you in this show or an up-and-coming show. Or actually, if you leave your telephone number, a lot of times I will give you a call back. So before we actually get started on, what I saw this week in the markets, because the economic numbers that came out that were very, very telling, and the revisions that came out, the deep revisions that came out, were also very telling. But, I do want to focus in on, our guest that's actually coming in at the bottom of the hour. I kind of want to get a head start with you on questions that I should be asking her and thoughts. I mean, her book that she just wrote is called Signals, the Breakdown of the Social Contract and the Rise of Geopolitics. And again, this is an ex-plunge protection team whistleblower here in the United States. And she just came out in the book, and she's been on a series of different interviews since the book came out. And she's basically saying governments control the stock markets and that there's absolutely no price discovery anymore, which means that there's no free markets anymore. Demand doesn't do anything to the stock market. It's all about what the government wants to do with particular stocks. So it got me thinking, and I was wondering if you were thinking the same thing, what's going on in our economy that they have to sit there and act like this, that they have to hide this? I mean, are there signals out there that I'm missing, that you're missing, or are we seeing them? We're just not quantifying them or boiling them down to what the truth is that they're telling us. Like, for example, have you noticed that the amount of cereal in your Wheaties box actually mysteriously shrinking? Or the price of popcorn at movies now suddenly costs more than a filet mignon? Or what about the cost of sending your kid to school? I mean, some of those prices are just outrageous, and the schooling isn't as good as it used to be. And what about this? Have you noticed that if you've ever gone on an airplane now, that the seats have actually gotten smaller and there are more people in the seats? These are all signals of economic weakness. And it's something that I understand what she's going to be talking about, Pippa Malmgren, Dr. Malmgren. But I also want to hear from you. Are you seeing anything else out there that's indicating to you that, that our economy is actually doing poorly, although Washington and the storytellers in Washington tell us otherwise? How about the cost of health insurance spiking, or your tax burden is actually getting worse? Or what about the cost of heating your home? I mean, they keep telling us there's no inflation, but the cost to heat my home continues to go up. I mean, even if I were to focus on the simple thing like, the incredible shrinking plane seats, American Airlines is doing this, United is doing this, other carriers are actually wedging in an extra seat into each coach row, not just one extra seat in the plane, it's in each coach row. And they need to make more money. So they're either going to do it one of two ways. They're going to make you pay a premium for legroom, or they're just going to get more money out of the flight. And they're just going to squeeze more people into it because they just aren't making as much as they used to. And this, whether this is a debate about defending your knees or saving a dime or two, the bottom line is, this is happening. And, knee room and leg room have decreased in recent years because they're squeezing in more seats. So you have to ask yourself, have seats gotten smaller back in economy class where most of us fly? Have cabins actually gotten fuller? And the unequivocal answer is yes, yes, and yes. And you'll have to just deal with, the trends that are happening. And this trend is that there's just a weakening economy out there. And that means lesser profits to the bottom line for the airlines. And that's the type of thing that Dr. Malmgren is talking about when she's referencing signals in the economy. The American economy is experiencing the slowest recovery in 70 years. And in addition to what we already know is this extremely high unemployment, labor force participation, for example, has fallen sharply since the recession began in 2007. Today, 6.9 million fewer Americans are working or looking for work, and this drop accounts for virtually the entire reduction of the unemployment rate since 2009 because those not looking for work just aren't counted as unemployed. But these weird gimmicks that the United States government, when they report this to us, do it because they think we can't handle the truth. We think that, if they tell us a lie, that we're going to buy into that, and they just hope that, I guess, eventually their method is actually going to catch up, their method of quantitative easing and forcing liquidity into our system and controlling our stock market to make it look like it's stronger than it is actually going to be, going to fool us until they do make it. But that's not going to be the case. And unfortunately, more and more people are finding out, which is, again, I asked this question before I jump into what I saw this week. Honestly, have you noticed any of these different signals out there, signs in your life that tell you that the economy is doing worse? And I know it's simple things like the Wheaties box. I mean, do you have less Wheaties in your cereal box? Again, what about the cost of sending kids to school or the shrinking food portions and food boxes across the board or even at restaurants? Everything seems to be at a different size, which means you're paying the same amount, but it's less money, which means they're trying to make their margins even though, in fact, you're getting less. So I look forward to hearing from you. I'm at 1-855-884-DAWN. Again, that's 1-855-884-3296. This is my contention. Washington is making our lives much more difficult by going out of their way to produce numbers that hide the consequences of their actions. So I want to hear from you. What are the economic signals you're seeing? Simple signals in your life. I'm at 1-855-884-3296. Again, that's 1-855-884-DAWN, Dawn. 1-855-884-3296. And while I'm waiting, and you do have your blood pressure monitor on, I promised you there's going to be blood-curdling exasperation when we go through this 2-hour show, because it's really going to be about what they aren't telling us. And regardless of your ideological or political leanings, I promise this is actually going to rattle your cage. So let me get started on this whole week. We had really, really ugly economic data, and I mean stinking numbers. Yet there still seems to be this dash for trash companies, which basically sums up the state of investing currently in the United States, which is that the United States government, the plunge protection team, lifts the stocks of companies that have extremely large debt levels and yet have no earnings. And you see, for 6 long years, we've been told that the U.S. is in recovery. Everybody's heard it. And, of course, we heard it this past week from Yellen when she was doing testimony in front of Congress. But again, this has been total bogus narrative preached to us from the D.C. pulpit of the Federal Reserve, the White House, and even Congress. The U.S. economy and markets are a mess. It's like these Washington storytellers have tried to prove this lie by fabricating just a load of nonsense. You know what it's like? It's like somebody coming up to me, and I'm 5'6", and they sit there and tell me, you're not 5'6", you're actually 6 feet tall. Now, you just need to believe what I have to tell you. You're 6 feet tall. But actually, I'm not. I'm 5'6", and as silly as that may seem, it just feels like it's the same thing with the Fed, where they continue to tell the American investor to jump in head first into markets just because the Dow and the S&P keep going up, and it just keeps hitting new highs, not because there's fundamentals supporting it, just because it's going up. But you need to see this as a red herring, distracting us from the reality of the sad state of our economy. I mean, the U.S. stock markets are addicted to easy money, and the Federal Reserve did this as a way to keep our attention away from the truth of which was surrounding us all this week. But I have to admit, the dump of bad numbers was alarming. I mean, it was pretty bad this week. And although the markets, of course, didn't respond to it because they're being protected not to respond to it, they're being stopped from responding naturally in a free market way. I'm going to give you some examples. Like the University of Michigan consumer sentiment numbers came out, and they came out on Friday. And I'm telling you, consumers in the United States aren't as enamored with the United States economy as they've been telling us they are, because it actually was at its lowest level in 16 months. It printed at 95.4 against January's 98.1. Now, that's not good. 95.4 versus January's 98.1. This is the biggest month-over-month drop since October 2013. So both current consumer sentiment and future consumer sentiment dropped from January, and it was all due to fewer people expecting higher incomes, so they know that they aren't going to get paid more, as well as a drop in favorable business expectations. So they actually don't believe business is actually going to get better. And again, that's bad news, but there's a lot more bad background noise you need to pay attention to, which is, again, back to these signals and these signs, because they are showing up in your life. It's just about you making the decision that you're going to see them. And when we get back from break, we're going to be talking a lot more about the economic data that wasn't any good this week, but also what you can be doing in your portfolio in order to benefit from it. Again, this is Dawn Bennett with Financial Mythbusting. I look forward to talking to you soon. We're back, and we're talking about signs and signals that share with us, that show us in our own lives that we're having a breakdown in our economy, we're having a breakdown in our markets. And I was talking again before we went to break about the University of Michigan's consumer sentiment numbers. They came out in their lowest level in 16 months. Well, another economic data point came out, the Chicago PMI, which is the Institute for Supply Management. And this Chicago Business Barometer actually fell for more than expected in February. It actually plummeted to 45.8 from January's reading of 59.4. 45.8 from January's reading of 59.4. This was the worst number for this index since July of 2009, and it was way, way, way below analysts' expectations. They were actually expecting minimally a reading of 58. So I guess, again, our economy isn't as strong as the Fed wants us to think. And these are the things that you need to be paying attention to, although maybe economic numbers aren't your thing, but make them your thing. Because you need to think on your own, and you need to determine what you need to do on your own based on what you're seeing, not necessarily but somebody feeds you. You know, the Fed wants us to think that, we are in a stronger economy than we are. In fact, our economy is so weak that even Janet Yellen this week, if you read between the lines and act like Nostradamus, right? When she was in front of Congress, you start evaluating honestly what she said. She couldn't even suggest raising rates anytime over the next several months, or in the next actually several FOMC meetings, which is a number of months, because, again, that just confirms she understands that the economy is sick by admitting that. And again, she maybe doesn't need to come out and say it because they won't. I don't know why. Again, I don't think they think we can handle it. That if she came out and said our economy is not doing well, that something would happen, right? So instead, she tells you we're not going to raise rates anytime over the next several FOMC meetings. And again, that's a confirmation that she's telling you. It's a sign, it's a signal, it's a way of sharing it with you without saying it directly that our economy is actually sick. There's other things, for example, that she stated. She said wages and income are still weak. Good for her. She squeezed that in. She said it very lightly, but she said it. She also admitted that the U.S. housing could improve. That was interesting. Again, these aren't strong statements that somebody would remember. You just almost have to listen very carefully as they come out of her mouth. Or when she came out and said that the employment numbers, the U3 number that they throw around, which again is typically plastered all over the media, saying that we have only a 5% unemployment rate, that it just might be misleading. I'll pat her on the back for actually trying to get some of this truth out, but I do think it needs to be stated in a very strong way. And the last point that I thought was fascinating that she brought up was that she said she strongly opposes an audit of the Federal Reserve, which, at that point I was wondering, what do you have to hide? What do you have to hide? So essentially, all this printing of money for the last 6 years has done nothing for our economy in the economic growth department whatsoever. And our stock markets, unfortunately, are addicted to very easy money. And the Fed has done everything in their power to ensure that you aren't aware. And I do think that the Fed is overtly aware of the overvaluated markets, but really just see it as a lesser of two evils, honestly. And in a really weird way, those participating in the markets really honestly want the Fed to continue. And again, that would just be people that own S&P index and the Dow index. They really want the Fed to continue because it's becoming a no-brainer. The fundamentals aren't holding it up. The earnings aren't holding it up. It's the Fed that's holding it up, owning it and pushing it up. And it's helping their wealth appreciation. But at the same time, you need to know from that short term point of view and that shortcut point of view that there will be a massive devastation coming. That will always be the ultimate outcome when the markets aren't allowed to have a free market where they're allowed to just pay attention to the true economic data and perform accordingly. So I guess until that happens, as a nation, we're actually going to continue to sail further into the storm, this really difficult economic storm, with our fate set, which means we're probably going to end up drowning because nobody seems to want to get prepared or be truthful about what's going on, again, in the economy. So, I talk about these signals and, at the bottom of the hour, you have to stay tuned. because our guest, Pippa Malmgren, is going to be here, Dr. Pippa Malmgren. And, I've said this earlier, you want to stay tuned because she's also an ex-plunge protection team whistleblower. And she has said in her book that's out, which is Signals, the Breakdown of the Social Contract and the Rise of Geopolitics, that the United States government's controlling our U.S. markets. And there are absolutely no price discovery anymore. So there are no free markets out there. Supply and demand has nothing to do with our marketplace anymore, as it has for the last, 25 to 30 years.
The views expressed on this program do not necessarily reflect the views of this station. Proper advice depends on a complete analysis of all facts and circumstances. Listeners should consult their own financial advisors or conduct their own due diligence before making any financial decisions. Securities offered through Western International Securities Incorporated. Member FINRA SIPC. This is Financial Myth-Busting with Don Bennett, where politics and the economy intersect.
Dr. Pippa Malmgren is here. Pippa was the deputy head of global strategy at UBS and the chief currency strategist for Bankers Trust. She was also a member of the U.S. President's Working Group on Financial Markets and the Working Group on Corporate Governance, also known as the Plunge Protection Team. Her new book, Signals, the Breakdown of the Social Contract and the Rise of Geopolitics, is a place where she explains in detail the signals of the financial repression we are in, as well as what she foresees as the end game of the financial crisis. One of Pippa's quotes in her book made sense to me, and it's something I've been using in the show, but I want to say it again. She said, quote, "There's no price discovery anymore by the market. Governments impose prices on the market." And this is where I want to start today. Pippa, welcome to Financial Myth-Busting.
Great, thank you.
So if anyone was to go back to 2008 during, some of our most difficult times in the stock market, it was pretty clear to me, I've been managing money for 30 years, that someone or something with pretty deep pockets were actually able to support the stock markets on some very critical days. Am I speaking the truth? Am I seeing the truth? Or is this just a conspiracy theory that I dreamed up?
Yeah, it's so interesting. Having worked both on trading floors and in the White House, I've been able to see how this picture looks from both angles. Mm-hmm. And I don't think, having served on the President's Working Group on Financial Markets, the idea that those guys have the power to just intervene in the stock market is really, it gets crazy. They're a bunch of bureaucrats. They don't know anything about how the stock market works, let alone have the power to intervene. However, I would say this. There are relationships always between the most senior policymakers in Washington and the folks on Wall Street, and they do talk to each other. And there's no doubt that when the stock market starts really falling, really wobbling, those guys on Wall Street will reach out to Washington and say, hey, what do you think? And if the response is anything like, we're worried, that alone is enough to get the market thinking they might do something. So the sense that there might be a response is often enough. You don't even need to do anything, if that makes sense.
Oh, it does make sense. So I'm going to put it down as a conspiracy fact.
Okay.
But you did say, because of this, there's no price discovery anymore by the markets, and that, governments, the United States government, actually imposes prices on the market. I know we're not the only government that does this, but it has removed the need for active money management.
Well, let me put it, the way I phrase it is this. Mm-hmm. The fact that the U.S. government and others have decided to enter into quantitative easing, what that does is several key things. One, it definitely pushes up the asset prices. It intends to do so. Its purpose is to make the price of stocks and property and bonds all rally.
Right.
So you can't be surprised if those prices start moving when they make such announcements. Can they micromanage the exact level? No, but they can make the environment so painful to go against where they want it to go then investors get hurt. For example, in Europe right now, we have more than 25% of all the government debt is in what they call negative interest rates. That means you actually have to pay the government to lend your money to them, which is a concept people can't even get their head around. But the purpose of negative interest rates is to make it so painful to hold debt that you're forced to put your money into riskier assets. And that is the name of the game. And so this kind of intervention to compel investors into investments they wouldn't normally undertake for fundamental reasons, this is what I mean by now price discovery is kind of gone. I mean, you basically can't tell unless you know what the head of the central bank had for breakfast that morning, where they want it to go.
Why are the central banks avoiding a stock market correction, a crash at all costs? I mean, are they just simply scared out of their living gourd?
I think they are, and I would go a little further and put it this way. When the financial crisis happened, it was almost like the market was just punch drunk on its own egotism and almost drove the world economy into an irrecoverable ditch. But the central bankers feel that they grabbed the steering wheel just in time and took control of the situation. And now that they've steered the world economy back onto what they view as a better path, a better situation, they're very reluctant to hand the control back to the markets. And I've had, conversations with the senior folks, for example, the Federal Reserve, and their view is, are you insane? Do you want to give control back to those traders who can't hold a single idea on their head for more than 30 seconds before they change their mind? And my answer is yes. We want to give control back to the markets because what we know for sure is that when states direct outcomes, you get bad outcomes.
So market buoyancy, especially in the United States, hinges on our Federal Reserve, almost their every word and deed. I'm curious about something. Why is it that the mainstream media doesn't report what you talk about, what you write about? And why isn't anyone saying this isn't about fundamentals?
Well, I definitely wrote the book with a view to giving airtime to the views of the dissenters. The people on the board of the Fed who've been in opposition to the continuation of quantitative easing, but also the emerging market policymakers who've also felt the adverse or spillover effects from quantitative easing, who've had some serious questions as well. And I guess the simple answer might be that anybody who challenges the status quo is, potentially going to be not held in the inner circle anymore. But the thing is, I've already been in the inner circle. So I already know what their views are and what, goes on there. So I can afford to step forward and say, here's what I think. But again, it's so interesting when I talk to my Russian and Chinese policymaker contacts, they're all like, hey, who's more communist now? You guys with the level of intervention you have or us? And, they kind of have a point.
Well, let me ask, you've written about how the Fed is destroying price discovery. And again, as we've said, nobody talks about it. Can we survive without it now in the world that we're in?
Well, this is a huge question. I think the answer is yes. And the person that I cited in my book is a guy called Ludwig Erhard, who no one remembers. But he was the guy after the Second World War in Germany, after they had moved on to price controls for everything in order to prevent inflation, and because the market obviously couldn't work in a war zone. And he became the finance minister, and he did something truly astonishing. He announced that Germany was going to abandon all price controls and put the discovery of prices back into the hands of the market, and they just did it. And it was scary because, the price of bread, could have been the equivalent of $1,000 overnight. But if you trust that, markets are responsive. People are able to discern what the right incentives are, that it's worth making bread if you think there's demand, then you can do it. But I fear that the problem today is that our policymakers really have lost their faith and trust in markets. Where the American public has not, but the policymakers have.
How could they be so different than us? What
Well,
world are they living in? I mean, I live in Washington, and
it is another world. And having lived in that world in Washington, it's a very rarefied environment. Almost none of them have any market background. I mean, when I was in the White House and we had, for example, 9/11, I remember after 9/11, basically showing the other policymakers in the White House, the charts of what was happening in the stock markets around the world, and basically being reassuring that markets are adjusting to these facts as they always do. So we don't have to be too worried about something like a catastrophic market failure. And what I was showing were graphs and charts, and I realized what they saw were squiggly lines. Right. What I saw was meaningful price movement. What they saw were squiggly lines. They're like, why is this relevant? Washington doesn't get markets.
Well,
I'm actually serious.
I'm sitting here just listening. I'm in awe. I've gotten the feeling that probably the White House doesn't understand economic charts in the last 6 years, but I didn't realize the Federal Reserve and a lot of people in Washington were that disconnected. I think Americans would be very afraid.
At one point in the book, I quote an interesting meeting that happened between a former White House advisor, Ambassador Richard McCormick, and the former head of the Federal Reserve, William McChesney Martin. He was the longest-serving chairman. And McChesney Martin basically says, there's a reason we keep the macroeconomists here at the Federal Reserve in the basement of the building, and that is because they're very useful there, but you don't really want them to be running things because they don't have practical experience of what is out in the real world. And I do think that the Fed and the Treasury's experience, both under President Bush and under President Obama, it's not a partisan issue. I think they have all been quite shocked by, how formidable markets are, how hard it is to know where they're going, to try to determine where they're going, to try to make them go where you want them to go. But on the other hand, I don't blame them either. I mean, their area of expertise is different, and people in markets would do well to also respect the fact that they've spent their career doing other things that are also valuable. They just don't understand this area. So when people ask me what's my core skill set, I always say I speak both Klingon and Federation, which seems only apt in light of Leonard Nimoy's recent passing. But, I speak because the Klingons are the market guys, and they don't understand the policymakers. And the policymakers are the Federation, and they don't understand the market. So I just explain one side to the other, and that's what I do in the book.
Well, they're hiring lopsided. That's what
they are hiring lopsided.
Let me go back to your book. You write about shrinkflation, a term you use to describe manufacturers selling smaller amounts of their goods for the same price. Cereal boxes, for example, we're seeing are the same price, but same size of a box, but it's less in there. And, so airplane seats, for example, are getting smaller. What are other examples you came across in your research of shrinkflation?
There's so many examples. Look at this new phenomena called micro apartments, right?
Oh, yeah.
Tiny little apartments in big urban areas that you can't swing a cat in. It's like 1,000 square feet. But now that's considered a perfectly legitimate, reasonable size of an apartment. Everything is kind of getting smaller but costing the same or more than before. And I think that reflects latent inflation pressures building up in the system. It's an early indicator that the margin of the input cost versus the price you can sell it at is being squeezed because the input costs are rising. And so when everybody says, well, there's no inflation and there's no risk of it, I'm like, wait a minute. If 99% of all the people surveyed in the market think that's the case, I'd like to take the other side of that trade just because of those numbers. Yeah. But more importantly, let's face it, every major central bank in the industrialized world is doing its level best to create inflation. And we've never seen this happen among all of them simultaneously, but usually any one of them can do it and does succeed. So my point is, what would be the early signals that it is succeeding? And one of them is exactly what we saw in the 1970s, last time we had inflation, and that is this shrinkflation, where the size of things starts to get smaller, but the price stays the same. So what you're paying, for example, for steaks, I'm on a board at Indiana University, and when you go to the Midwest, it used to be a steak that was like less than 16 ounces was an hors d'oeuvre. Now it's normal to see 6 8-ounce steaks on a menu, and I don't buy that it's suddenly health consciousness. Right. I think if you look at the price per ounce, it's gone up. And that makes sense. We've got record high beef prices.
So the Fed uses the term hedonics. I hope I'm pronouncing that right.
Yes, you are. Yeah.
And they use to adjust inflation downward when technology improves. For example, if a computer gets faster but the price remains the same, the Fed would say that the price has actually gone down due to after being adjusted for hedonics. So I have to ask, does the Fed do anything like reverse hedonics for shrinkflation?
No, and this is my question: is how come it only goes one way? So we don't make adjustments for losses in productivity. And I use the example of comparing apples, as in Apple Macs, to apples, as in the kind you eat. So in Apple Macs, okay, yes, maybe the capability of each iPad is getting bigger, but what about the people who can't possibly make use of that? They just don't have the technology skills. They just need it to do the basic stuff. They don't have the option of buying a cheaper version that has less content. And similarly, on the other side, we used to have apples that tasted great when I grew up in Washington, D.C. years ago. Now they're better at making apples that can stay on the shelf a lot longer.
Right.
They look beautiful, but they don't taste great.
They aren't as crunchy.
Do we adjust it downward? No, we don't.
So this week, and here's another example I'm just going to ask you about. The price of ground beef rose to an all-time high.
Yes, it is.
Is this another kind of signal that's that's being sent out to the economy? Other than, my executive producer and I love tacos, so that has affected our life, at least for the week.
I hear you. I think it is a signal. Listen, prices are signals. And so what is it telling us? Well, it's very interesting that we've got the lowest level of the cattle herd in the United States since, I think it's 1951. And we see land prices, farmland prices, at nearly all-time record highs. So the thing is, the price may be record high, but it's not like it's easy to make profits in this space. And therefore, I don't see a whole lot of new investment going into this area. That tells me that I think the price is going to remain high or go higher, which is exactly what the USDA is forecasting. So protein prices matter. And we look around the world, we see protein prices rising in most locations. Mm-hmm. Fish, pork. Yeah. And this has all kinds of consequences. But I guess one of the key points I make in the book is we have this strange world of a kind of biflation. On the one hand, the data says prices are falling and we have deflation. On the other hand, any barbecue, any dinner party, any school pickup, the only thing everybody's talking about is the rising cost of living. Right. And so we have these two worlds, and I think that over time we're going to find that these signals like the fact that your hamburger costs more is actually telling us something about what the future is going to bring.
How come Americans don't pay attention to signals? I get the sense that we're so comfortable being told what to do, but when you go outside of America, I think they're more independent in their thought process, that they actually come up with their own conclusions. Are you seeing that? I know you live in London now.
Yeah, actually, I have to say no. I really don't see that. If anything, I think the country that has the most dynamic responses to price signals is actually the U.S. And I've been very bullish over the last 4 years on the ability of the U.S. economy to innovate and change, to tighten the belt and come up with new business models that generate good cash flow. And surely enough, the U.S. has emerged as the number one place for things like additive manufacturing, that's super high-tech manufacturing, and we see manufacturing moving from China back to the U.S. at an incredible speed. And this is because businesses are looking at the signals and saying, hey, there's an opportunity here, and we should act on it. Whether that's true for somebody who's just kind of cruising through everyday life, I think they also pay attention, and they start to change their behaviors depending on what the signals are. What they don't do.
Pippa, we're actually going to go into break, but I want you to stay with that. We're going to talk about it more when we get back. This is Dawn Bennett with Dr. Pippa Malmgren, and she is the author of the book Signals, The Breakdown of the Social Contract and the Rise of Geopolitics. And Pippa, before we left for break, you were talking about how manufacturing is actually returning from places like China back to the United States. And I'm just wondering, is that really a good thing or a bad thing? I mean, and what type of manufacturing? You're talking about expensive manufacturing or cheap?
Well, I'm talking about the whole range. It's so interesting now that it's actually less expensive to make hula hoops and, toys like rubber ducks in the U.S. than in China. And that's partly because their wage demands have gone up so much, and Americans have become willing to work and to innovate at lower levels of income. So suddenly the wage differential is narrowed a lot, but the innovation capability of the U.S. is so much greater. But it's also high-tech. It's things like 3D printing, which is being applied to so many different areas, from manufacturing to food to medical technology across the board. Now, is it a good thing? I think it's a great thing, but for China, there's a question. What are they going to do to generate revenue now that they're no longer the cheapest place to manufacture on the planet? And the answer is they're going to have to move up the value-added curve.
Right.
They're going to learn how to start making more expensive, higher-tech items, and that can only be a good thing because that's how you'll raise national incomes in China.
One of the main antagonists in your book are central bankers. So I'm just wondering, what's your opinion about Bitcoin?
Well, I think Bitcoin is fascinating because
Me too.
It's kind of the new version of gold. It's a way that the public express their lack of faith and confidence in fiat currency, as it's called. That means, government's version of currency. And they look for some alternative place to put their savings. My concern about Bitcoin is that I think it's so interesting. We live in a world where, we have front page news stories about how governments kind of listen to everything that you're doing on the internet, as you talk on the phone, no doubt on this radio program.
No doubt.
No doubt. And yet we all think our password's going to be safe. And I'm like, really? So I don't know. I have concerns about electronic currencies, but there's a demand, and even countries are now turning to electronic currency systems. Like Ecuador this year has implemented the first electronic currency for a nation.
So you think this is an innovation that could actually help shape our future?
I do. I think it's one of several innovations that are occurring in the financial arena that are really important. Another one of them is crowdfunding. And I think, again, back to policymakers, it's so interesting that one of the indicators of inflation is their velocity of money. That means, is the money in the economy actually moving? You can give it to the banks, but are they lending it?
Right.
And banks can't lend, partly because they fired every lending officer. They no longer have the capacity to lend. But
or
also
the guts.
they're so impaired with their balance sheets.
Right.
But what's interesting is crowdfunding. That's working beautifully. And in fact, I launched my book on Indiegogo, a crowdfunding platform, just to prove that point, that actually the velocity of money is higher than you think it is.
And was it successful for you, launching it there?
It was. It was unbelievable.
That's
I
good.
put it up on Indiegogo and raised 259% of my target.
Wow.
During the period. In fact, I got to 249% of the target in literally 15 days. It was unbelievable. And then I threw it up on Amazon, and it went straight to the top of the Amazon bestseller list in 3 different categories. And I think that's partly because people are watching the crowdfunding space, and when they see something successful there, they go, oh, this is kind of cool.
It is kind of cool. I've got about a minute and a half left with you, Pippa. Okay. Your book concludes on a hopeful note. You write that the economy of tomorrow is actually being built today. I'm very curious about that. What is it? Are we just innovating ourselves out of a bad government, or are we? I mean, we've got a lot, especially here in the United States, we have a lot to make up. We have a lot to fix.
Okay. 2 things very quickly. One, regular people are innovating. I tell a great story about this woman in Missouri who runs a wonderful quilting company. She gets like 1 million hits on every YouTube video she does on how to quilt. She's creating jobs galore. So it's not all high tech, but governments are also innovating, and they're innovating in good ways and bad ways. The bad way, in my opinion, is becoming more aggressive with taxation, delivering less on what they've promised. That breaks the social contract between citizens and their state, and that's a problem. On the other hand, some are innovating in ways that are positive. I mentioned the legalization of marijuana as one interesting case in point, because once you legalize it, you can generate tax revenue off it. And so far, I don't know, everybody seems to be reasonably happy with the outcome in Colorado. So that's a positive innovation.
At least on the short term. I want to thank you so much for being on Financial Myth Busting, Pippa. Everybody, if you want our book, you can go to Amazon. It's called Signals, The Breakdown of the Social Contract and the Rise of Geopolitics. Stay tuned.
The views expressed on this program do not necessarily reflect the views of this station. Proper advice depends on a complete analysis of all facts and circumstances. Listeners should consult their own financial advisors or conduct their own due diligence before making any financial decisions. Securities offered through Western International Securities Incorporated. Member FINRA SIPC. This is Financial Myth Busting with Don Bennett, where politics and the economy intersect.
And this is Don Bennett, and we are live. We've got a great show today, but I've got to say, I think it's actually a little bit more blood-curdling, because I can't imagine that people aren't just going to just be exasperated and about, what's going on in our markets and our economy with the market control that is actually done by your United States government, by the Federal Reserve, by the plunge protection team, whatever you want to call it. And I'm saying this regardless of whatever your ideological or political leaning is. We are all in the same type of mess. And the economic data that came out this week was pretty tough, was pretty hard. And in fact, the markets actually responded pretty well to them. But again, when the markets aren't free markets and they don't care about supply and demand and they don't care about fundamentals, why wouldn't they? So before I jump into that, though, I just want to remind everybody a couple more times, I have a stake seminar that's coming up next week. And if you're interested in coming, we're going to be talking about the surreal and sinister markets of 2015. And I'm going to have you as a guest for dinner. It's a steak dinner. It's at 7 p.m. Again, it's at the Capitol Grill in Chevy Chase, Maryland. And you have to RSVP for this, so please give me a call if you're interested in coming. It's at 866-286-2268. That's 866-286-2268. And again, it's this Thursday, March the 5th. It's one of my stake seminars, and I will be able to meet with you personally. And I'll share with you my ideas about what I think 2015 is. I've titled it The Surreal and Sinister Markets of 2015, so that gives you a little indication of what I'm going to be talking about. But this steak dinner is going to be at 7 p.m. at the Capitol Grill in Chevy Chase, Maryland, so it'd be great to see you and to meet you. And if you're interested in coming, you've got to RSVP at 866-286-2268. Again, that's 866-286-2268. And or you can certainly email me at bennettgroupfinancial.com. And that's what I call the old-fashioned way. You can click on the Contact Us in the upper right-hand corner of the page, and we will answer you. One of my staff will call you if it's regarding the steak dinner or if it's a question regarding your portfolio. We've been money managers for 30 years on my team, and the last 6 years have been extraordinarily difficult because they aren't logical. And when there are no more free markets, the United States government is actually controlling them. It's kind of tough to figure out what to invest in. What I found fascinating this week is that there were actually large investment houses that actually came out and said that if they continue to do this, that the active money manager within the next 3 to 5 years will actually be out of business. So that's an interesting twist, and I wanted to share that with you. If you have any questions regarding your portfolio, again, you can give me a call today at 1-855-884-DAWN. And again, that's 1-855-884-3296. Or you can go to Financial Myth Busting on Facebook or Don Bennett FMB on Twitter. And again, you can always email me. And by the way, if you put your telephone number in there and I don't get to you on the show today, I usually call people back to answer their questions because I think it's important for you to manage your portfolio as best as you possibly can in what I call one of the most difficult and challenging times because things just aren't that straightforward. And we had a guest, by the way, at the bottom of last hour, Dr. Pippa Malmgren, and she actually was a whistleblower from the plunge protection team. She used to be part of the plunge protection team here in Washington, D.C. The formal name of that group is called the Working Group on Financial Markets. I just gave you what I call the jargon of Wall Street. And the working group, again, is known as the Plunge Protection Team. And she came out with a book this past week where she talked about how there's no more price discovery anymore by the markets. Governments are imposing prices on the stock market. And I thought to myself, her book's name is called Signals, the Breakdown of the Social Contract and the Rise of Geopolitics. And it got me to thinking, and I was wondering if you were thinking the same thing, that have you noticed that, certain things in the economy are actually indicating to us that the economy is not getting better, no matter what Janet Yellen may tell us during testimony in front of Congress, or the Federal Reserve may tell us separately in a notice, or Congress or the White House. And you can see it in things like, for example, the cost of sending your kids to school is far more expensive. Or have you noticed that the amount of cereal that's in your Wheaties box has mysteriously shrunk? Or the price of popcorn at movies actually is costing a little bit more than a filet mignon. I mean, that's the type of world that we're in. Or I talked about last hour that, have you noticed that the seats on airplanes have actually gotten smaller? So these incredible shrinking plane seats are getting smaller because these carriers like American Airlines and United are trying to wedge in an extra seat into each coach row. And because they need to make more money, they need to make their margins, whether they're going to ask you to pay a premium for leg room and or they have an extra body, a couple extra bodies they can actually carry on a flight. That means they get to earn more money. So these smaller portion sizes in restaurants, I'm asking the question to you and I'm curious, does it feel like the economy is actually stronger? And I want to hear from you. I'm at 1-855-884-DAWN. Again, that's 1-855-884-3296. And if it does feel stronger, does that mean that you actually are feeling wealthier instead of feeling poorer? Most people I talk to don't feel the economy is getting stronger, because I'd love to get some other input, but they don't. That's the vast majority of them. And they're also saying they're not feeling wealthier, obviously, because of that. They're actually feeling poor. And I'm wondering, how do you feel about that? There are these signs and signals all over the place. They're telling us, for example, that the economy is not doing well. I mean, the American economy is probably experiencing the lowest and the slowest recovery they've had in 70 years. I think it's why people are dropping out of the workforce. That's another sign or signal to me that the U.S. labor force is actually shrinking so rapidly that even back in 2007, 66% of Americans had a job or were actively seeking work. But today, that number is at 62.8%. That's the lowest level since 1977. That's what I'm talking about as a sign or a signal. So, I'm asking, do you think that the size of the labor force matters? Is that a sign or a signal to you that we aren't doing well, or we are doing well here in the United States? Give me a call at 1-855-884-DAWN. Again, that's 1-855-884-3296. And also, I want to hear about what you thought about Janet Yellen and her testimony with Congress. I'm going to be jumping into what I saw during the week in the markets. I'm going to be talking about some pretty bad, ugly, harsh economic data that came out that I think we all need to pay attention to. But, this really backs into, when I read these negative numbers, is the Federal Reserve doing what they should be doing? Is Janet Yellen really doing its job? And have you ever wondered what it would be like without the Federal Reserve? Would everyday life change? How would the cost of living be affected? Give me a call at 1-855-884-DAWN. Again, that's 1-855-884-3296. So I told my listeners at the beginning of the last hour, that I need for you to strap on your blood pressure monitor, because I just think that the data that continues to come out is so negative, yet we're not hearing that in the media. We're not hearing that from the White House. We're not hearing that from Congress. And it just seems to me that there's this unnatural dislocation between the U.S. economic health and the U.S. stock market evaluations and what we're hearing. In other words, our entire financial system is out of whack. And the culprits of this crime, I believe, are our own Federal Reserve bankers that are more like fallen angels who are chaining us to a future life in monetary hell. I mean, our stock market is a red herring. And what it's doing is keeping our focus, I think the important focus, our smart focus, away from the reality of the economy. And so to quit propping up the stock market would be synonymous to actually removing the only support beam holding up a 50-floor building. I mean, the question I have is, when will the Federal Reserve actually allow the repricing of our markets? I mean, if they don't soon, I'm certain of one thing. that the financial advisory business, a lot of Wall Street, active money managers, they're going to be gone. Now, even money manager Neuberger Berman, the big financial house Neuberger Berman, came out and they actually shared their same concerns this week on this issue. They said if the Fed, this is quote, if the Fed continues to prop up the markets, there won't be any active managers in the next 5 years, unquote. Because, and you just need to know this, in a straight up market, there's no need for money managers. There's no need for active money managers. All you need to do is jump into an index fund. Primarily, it should be the Dow and the S&P. That seems to be the two indices that the Federal Reserve and the plunge protection team are actually supporting. But they're not the only ones that came out. Hedge fund founder Baupost, Seth Klarman, actually came out and wrote, a value investor's task in 2014 was made much more difficult by these loose monetary policies. And the resultant tide of bullishness. For 6 years and counting, optimists have been relentlessly rewarded. I mean, that's all they've been, is rewarded. And skeptics punished, unquote. So as far as the real truth about our real economic growth goes, if you really want a clear picture of what's going on, one of the things I tell people or my clients at Bennett Group Financial Services is to always study the GDP when the GDP number comes out. But it isn't the GDP that actually is reported to you by the Bureau of Economic Analysis, the BEA. It's the nominal GDP growth. And you see, when the Fed announces the GDP, they always understate inflation, right? Which makes the GDP number completely unreliable and unrelatable to actually what's going on in our own fiscal lives. So by using nominal GDP measures, you actually remove the Federal Reserve's phony deflator metric and the other accounting gimmicks they came up with to make it look stronger than it is, to make you feel better about it. With that in mind, I'm going to remind you, do you remember back in December 2014 when the BEA, again, this is the U.S. Bureau of Economic Analysis, actually announced the third quarter GDP number, and it came out at 5%. Do you remember that? Well, I remember because I think I passed out at my desk thinking, where in the world did that number come from? And plunk, I went down to the ground. This past Friday, though, I got up from my desk, by the way, back in December, and I thought, well, they're going to revise this thing down. And boy, did they, because this past Friday, that 5% dream GDP number was actually reduced by approximately 60% when the BEA announced that the fourth quarter GDP was actually revised down to 2.18%, which is the lowest economic growth rate since, a long time. The main reason for the revision was a substantial drop in growth contributions from private inventories, which instead of adding 0.82% to the bottom GDP line, they actually only added 0.12%. Again, they were anticipating a 0.82% of private inventories being added to the bottom GDP line, but it only came in at 0.12% in the fourth quarter. Again, this GDP report not only was a downward revision, it was a signal, it was a sign, it was a wake-up call for you to realize that we aren't as strong out there as we should be, which means the market's not tracking right. It's going up on its own volition without any consideration to fundamentals, any consideration to any type of economic data, and that's just not how it's supposed to work. There were even some more downward revisions inside the GDP number, which I wanted to point out. And, again, when I read these, just know one thing. It simply means that the bean counters in Washington, D.C. are starting to figure out that they can't continue with all the bogus numbers. So these revisions are starting to get it pretty dark, pretty heavy. So here's what I mean. Personal consumption, for example, was supposed to be 2.83% of the final GDP number, and again, that was down from what they anticipated, 2.87. Or net trade was even subtracted more from growth, with the net exports less imports amounting to negative 1.16%. And that was, of course, down from negative 1.02%. And when I read you these numbers, I know it doesn't sound like a big difference, but when you start to add them up, it's what caused them to revise this down to a 2% read as opposed to 5% read. But on a quarter-to-quarter basis, one quarter going to the next, that's just too big of a drop, which means that number, that 5%, probably just wasn't a real number. Look, this whole economic recovery, I'm just going to put that in quote, and stock market boom is based on accounting gimmicks. You just need to know that. And you need to see this as a giant house of cards that is primed to come crashing down, just as it did in 2000, just as it did in 2008, and probably now. Stay tuned. We're going to be talking a lot more about this economy and Yellen. This is Dawn Bennett, and we're back. We're talking about the Federal Reserve and, if they're really doing a good job. The economic data that came out this week was poor. It was harsh. It was ugly. But the markets, of course, stayed about the same, which means that they really just aren't in reality. And I just don't know if that's a good thing. I realize that some people are actually staying in the Dow and the S&P as an indice. But in fact, at some point that may not be a good plan because they may head into some difficulty because there will be some form of correction coming. I don't know when because the Fed can't hold it up forever or the plunge protection team can't hold it up forever. So I'm asking this question, is the Federal Reserve, Janet Yellen really doing its job? I mean, they wouldn't have to be doing this if fiscal policy was working, if the quantitative easing was working. Are they doing their job? And I want to hear from you. I'm at 1-855-884-DAWN. Again, that's 1-855-884-3296. I mean, have you ever wondered what it would be like to have a life without the Federal Reserve? Would everyday life change? How would the cost of living be affected? I mean, this week, Janet Yellen had given a report, her testimony to Congress on the health of our economy. And in essence, she stated that our economy is actually doing better. I mean, those were her bold statements. But she gave a lot of indications, a lot of signs, a lot of signals that the economy actually is not recovering. One of which is that she said that, that they are actually not going to raise rates. Now, let me tell you something. If the economy was doing well, they would be raising rates. And they said they weren't going to raise rates for a number of FOMC meetings. So I ask, what value does the Fed actually bring to our economy, and what would happen if we ended the Fed? The vast majority of Americans, including many of those who believe that they are educated about the Federal Reserve, do not really understand how the Federal Reserve really makes money for mostly the banks. And many of those opposed to the Federal Reserve will point to the record almost 80 to 90 billion in profits that the Federal Reserve made last year as evidence that they're, in my opinion, taking money from the American people and doing it in a very blind way. Every single year, hundreds of billions of dollars in profits are made by lending companies to the United States government. And, I'm just wondering what in the world would happen if the U.S. government is going into debt. Who's going to pay that when all this money is being made, but we keep carrying the debt as a taxpayer? I mean, why can't the U.S. government just print more money whenever it wants? But certainly that hasn't worked. And so the U.S. government has given the power of money creation over to this consortium, the Federal Reserve. And quite frankly, I actually think it isn't constitutional. And I think it's one of the greatest ripoffs in human history. So what would happen if we end the Fed? And these are things I was thinking about as Yellen was talking. I mean, I think a gold standard would come back. I think a new regulatory system would be in the cards. Savings would actually be much more attractive. I mean, because the Fed likes to keep everything near zero interest rates and forcing your hand to go into the stock market because you aren't getting any growth off of your fixed income. That would be one of the advantages if the Fed went away. The free market system would come back, which means the markets would be about supply and demand, which is certainly healthier than what we have now, which is just the Federal Reserve raising the Dow and the S&P no matter what the earnings are, and they haven't been good, no matter what the economic data is, and that hasn't been good either. We could have a whole new monetary standard. Many advocates of ending the Fed argue for a return to the gold standard. Under the system, the dollar's value would once again be tied to the price of gold. Or another option in this much more contemporary new era that we're heading into is that the U.S. dollar's value could actually be tied to a basket of commodities. My point to you is that, I wonder how would America be different if we could go back to 1913 and keep the Federal Reserve Act from ever being passed. And again, I want to hear from you. I'm at 1-855-884-DAWN. Again, that's 1-855-884-3296. And, while I'm waiting for you to call, I'm going to actually list a couple of other things that I thought that would happen if the Federal Reserve actually went away. There might be a shock to the system, and maybe that would destabilize things for a period of time. But I do think we would get our free market system back into place. Maybe that volatility would be good to clean out the old and bring in the new. Or there might be this into constant inflation, for better or for worse. I mean, tying the dollar's value to a commodity could really very well moderate inflation. If the country moved to a very strict gold standard, for example, the money supply would be bound to the supply of gold. So printing more dollars would require, actually more bullion to back them. And I think that would just be an incentive that would be smart, that would help to stabilize our system. So, in 1922, I'm just going to conclude with this. Henry Ford wrote that the people must be helped to think naturally about money. They must be told what it is and what makes it money, and what are the possible tricks of the present system which put nations and peoples under control of the few. And it's important to think about that because I think we've walked away from that. We have actually a surprise guest coming at the bottom of the hour, and I want you to stay tuned for Jay Cost. He's actually a reporter and columnist for the Weekly Standard, and he's got a new book. It's called A Republic No More.
The views expressed on this program do not necessarily reflect the views of this station. Proper advice depends on a complete analysis of all facts and circumstances. Listeners should consult their own financial advisors or conduct their own due diligence before making any financial decisions. Securities offered through Western International Securities Incorporated. Member FINRA SIPC. This is Financial Myth-Busting with Don Bennett, where politics and the economy intersect.
Jay Cost is here. Cost is a columnist for the Weekly Standard, where he writes the Morning Jay column. He's also the author of a new book, which came out on February the 10th. It's called A Republic No More, Big Government and the Rise of American Political Corruption. And that's actually where I want to start today. Jay, welcome to Financial Myth-Busting.
Thanks for having me.
So your book argues provocatively that America has lost its Republican form of government. Can you take my listeners of Financial Myth-Busting through your basic premise?
Absolutely. Well, first of all, thanks for having me on your show. And the book is it's a history of political corruption, and so I trace it over time. But it's more than that. It's a little bit policy analysis, contemporary policy analysis, a little bit political philosophy. And the argument of the book basically boils down to this, that when the framers of the Constitution were designing the government, they were very careful in the way they set the system up. Mm-hmm. They wanted to make sure that every institution within the government had necessary power to accomplish the basic goals that they set forward, and also to balance and check one another. And so power was sort of synchronized to institutions. The problem with political corruption is that subsequent generations have grown the government, the power of the government, so substantially beyond the original grant that was given in 1787. Mm-hmm. But we have not updated the institutions. The institutions are still more or less the same as they were when they originally were handed down to us. And this creates corruption in the following way. Is that you can think of the Constitution as sort of a finely crafted Swiss watch as it was originally designed. But we keep tweaking the system. And we keep amending it in effect. There's only 27 or so official constitutional amendments, but we have so substantially revised the powers of the government through effectively amending it that it's almost as if the watch doesn't work. Yeah. And so what happens is, Madison had this ideal. He thought that in our system, ambition would counteract the ambition. That was the whole point of checks and balances. But by giving the government so much power without updating the institutional design, we've sort of undermined checks and balances. Ambition no longer counteracts ambition, and what you see now is the misuse of power, the systematic misuse of power. And the way our government tends to misuse power is by favoring small factions or interest groups or pressure groups, whatever you want to call them, favoring them over the country at large, over the public interest. And that I define as corruption.
So our Constitution provides us with a government that's based upon the rule of law, not man.
Right.
And however, our laws are created and enforced by men, right? So our federal government is supposed to act like this, like Congress creates and abolishes the law, whereas man has to interpret the law. And so I guess my question is that where the corruption begins?
Well, corruption, yes. But, as Madison argued, James Madison was very concerned about corruption. He didn't use that word. He called it factionalism. But he was very worried about that, and he understood that it was inevitable, right? Mm-hmm. That it's ultimately tied to human selfishness.
Right.
And the problem in a Republican form of government, this is the paradox of Republican government, is that Republican government ultimately has to depend upon the rule of the people in some way, shape, manner, or form.
Right.
However, people are inherently selfish, and so the very principle of Republican government lends itself to corruption, which is to say that if you're going to rely on a bunch of selfish, ignoble people, then you stand a real possibility of getting selfish, ignoble legislation or law. And so Madison's solution to this problem, which had really flummoxed, generations, centuries worth of political thinkers, Madison's solution was carefully designed institutions to channel human selfishness into ways that are socially beneficial.
And those institutions are?
Those institutions would be the Congress, the bicameral nature of the Congress. They would be the court system being separated from the public will, be the presidency with the Electoral College, and then also on top of that, federalism. And then on top of that, you have things like enumerated powers. Article 1, Section 8 of the Constitution lists specifically the powers that Congress is to have, and it does not give Congress a general grant of power. You combine that with the Bill of Rights, which specifically limit what Congress can do, and also, of course, the 10th Amendment, which is sort of stuck on there as a reminder that, by the way, this is an enumerated grant of power. The point of the whole regime, the whole thing, it was supposed to set up a system whereby selfish factions enter the system, but they are balanced and checked by one another, and the end result of the process should be public-spirited policy. That was Madison's great contribution to American political thought.
So what if neither party, neither group out there actually represents the interest of the American people, since it seems today everybody's controlled by something like a foreign or domestic corporation, special interest groups, whoever provided the majority of the funding to them, whatever it may be. It just seems like everybody out there seems to be practicing dishonest, divisive type of politics. And it's aimed at not getting anything done, but more at manipulating the public opinion instead of, I think, trying to build an honest national consensus on an important issue that might be confronting our country.
Yeah, well, I think the problem that we have now, and the problem that I argue in the book, is that corruption is now, I don't understand it, corruption in the book is just bad guys versus good guys.
Right.
I understand it as the rules of the game, and I think it's embedded within the rules of the game now. And that in particular, and it's evolved over time. The rules of the game have evolved over time, and sometimes they've done a good job at checking corruption. Other times they've done a poor job. Right now they're doing a very poor job. And look, I think it's frankly embedded in our campaign finance system. Our campaign for Congress, the campaign finance system as we have it right now for Congress is basically one massive conflict of interest, which is to say that if I have business before some subcommittee within Congress, I'm going to donate $5,000 through my political action committee to every member of that subcommittee who might vote with me, and therefore I'm going to purchase, in effect, favorable legislation. This is the way campaigns are funded now, and nobody looks askance at it anymore. It's just the way things are done.
So does that mean that both the Democratic and Republican Party are actually destroying America?
Yes. Yes, it does.
Okay.
And the second half of my book, I look at 5 separate policies. I look at farm subsidies. I look at the Congressional Pork Barrel. I look at Medicare. I look at corporate tax policy, and I look at financial regulation. And in all 5 of them, I see the government systematically tilting public policy to well-connected, well-heeled interest groups. Mm-hmm. And I see both political parties engaging in this. And in fact, you can look in particular at the Republican Party on, say, farm subsidies and Medicare reform. They were very pro-reform in the mid-1990s when they first got control of the House of Representatives. They passed a good farm reform bill and a so-so Medicare reform bill, mm-hmm. But later Congresses that were also run by Republicans allowed those reforms to be chipped away by constant pressure from interest groups.
So if all this lack of care and attention is given to the best interest of the American people, how do we turn this around? Don't we need a federal government and parties that will actually place the interest of the public before any of their ridiculous petty disagreements and personal agendas?
Yeah, that's what we need, and that's a very difficult task to, accomplish. And, the book lays out in some detail that it took a long time for us to get to this point, and it's going to take a long time for us to dig our way out of it. I think that ultimately, I would go back to the experience of Madison and also Thomas Jefferson when they felt like the Republican character of the government was being taken away in the 1790s with legislation like the Alien and Sedition Act and the raising of a permanent military force. What they did was they organized, and they used the ballot box as the ultimate corrective, was their last recourse, if you will. And I think that is something that is underused in this country. I think that voters, I'll give you an example. I think, now the Republican primary season is heating up, and people are spending an inordinate amount of time looking at every dot and tittle of that race.
Right.
But I think they spend too little time focused on their member of Congress and what he or she may be doing and whether or not he or she is actually, engaging in that kind of conflict of interest system that I discussed. And, there are so many elections that just go unused, primary elections that could root out members of Congress who are part of the problem rather than part of the solution. And they're so rarely used. And, the amazing thing about it, though, is that you wouldn't have to kick every member out to get them to behave. All you'd have to do is kick a couple of them out and put the fear of God in the rest of them. And that's something that I just don't see is done, frankly.
Who would be the person to put the fear of God in them?
Well, I think, I think that primary voters in both political parties, but in the book I also suggest that I think this is an area where liberals and conservatives actually have maybe more common ground than they appreciate. Mm-hmm. Is that liberals want, they both sides want a government that acts disinterestedly, which is to say that a government that doesn't play favorites. And both political parties may talk about disinterested government, but when you actually look at the fruits of their labor, you see it is very partial. And I think that there's an opportunity there for both sides to coordinate. But, that's part of the partisan game, though. The partisan game divides people who may, for instance, left and right gets divided by the two political parties fighting endlessly about the top marginal tax rate. And so while we are debating the top marginal tax rate, both sides leave our corporate tax code as is, with its vast nexus of payoffs and kickbacks to well-placed industries that basically pay nothing in taxes. And we're just so endlessly divided on that one issue that we ignore the potential for common ground on something else. Something similar in financial regulation. I mean, the left and the right debate endlessly about more or less regulation, but there's been precious little conversation about regulatory capture, which very clearly happened. Fannie Mae and Freddie Mac clearly captured their regulator. Countrywide Financial captured the Office of Thrift Supervision, as did Washington Mutual. Nobody on the left or the right wants regulatory capture. So, like I said, these are areas of potential agreement that the partisan divide will not allow those to be discussed. They spend time talking about areas where we're divided, and that's the way the parties operate. And what you need, I really think you need not just active, aggressive, sustained public pressure, but a left-right alliance on a limited set of goals.
Well, especially in the financial world, regulatory capture would mean that people would have to be truthful about what went on, who got paid, how much they got paid, and who was involved. And we don't live in a world where, especially in D.C., where they want the truth to be out.
No, that's absolutely correct, and you can see that with the response to the financial collapse of 2008, which is they have just, effectively reinflated the bubble without trying to fix the underlying problems that generated the bubble in the first place.
Yeah.
And again, I think this is something that, ultimately return to Madison and Jefferson. Their final solution, their backs were against the wall by 1798, and their final solution was, we need to mobilize the public. We need to make them aware of what is going on. And that is, I think, something that is lacking in our present day. For how much time we spend talking about politics as a country, I think we spend too much time talking about insubstantial things like, oh, did you see Scott Walker's speech at CPAC?
Right.
Or did you see what Hillary Clinton said in this speech, or how few people showed up to her event in Georgetown? These are trivialities. This is not where the real action is happening, and I think as long as the public at large is focused on what are basically trivialities, that facilitates a corrupt system or corrupt rules of the game. As long as the public is not focusing on the right areas, then the status quo is able to be retained.
And as long as the government's divided, it's going to be easy to forget how our founding fathers actually meant for our political system to operate.
Absolutely. I couldn't agree more.
This week, 2016 candidates gathered at CPAC. And to the listeners out there, that's a conservative conference. I'm just wondering what your takeaway was. Rand Paul won the straw poll. And do you think CPAC really carries any weight?
No.
Okay.
No, I don't. I don't think CPAC carries a lot of weight.
They're going to be unhappy to hear that.
Well, yeah, I just think that's, and again, coming from, before I started writing this book, I would have put a lot more care and thought into, or worry into CPAC and the results. But like I said, I just am so increasingly of the opinion that, whatever candidate the Republican Party nominates, his or her campaign is going to have to be financed in exactly the same way.
Right.
They're going to have to go to the exact same donors. And those, look, your average citizen kicking in $100 because he or she believes in the principles of the Republican Party or the Democratic Party, that's great. But that is not how these campaigns are financed. They are financed by massive quantities of money, PAC money, individual money that is bundled together. And this money is not given out of the kindness of the donors' hearts.
Right.
There is an expected return on investment. And as long as we continue with, like I said, we have a campaign finance regime that basically, legitimizes conflicts of interest. And so from my perspective, I look at all these candidates and I think to myself, they're all going to have to raise $1 billion to run against Hillary Clinton.
Right.
And they may have differences on the stump. They may have differences of emphases, but they're going to have to go to the same people to get that money. And now that does not, in my opinion, that does not lend itself to more campaign finance restrictions per se. I think the existing campaign finance regime with the restrictions that it has are actually what facilitate this sort of pay-to-play kind of system. But, I have a hard, and this sort of gets to the point of the book, which is, you look at the personalities and they cycle in and out, but the problems persist and they worsen over time, which suggests to me that it's not simply a matter of Democrats or Republicans, and it's not just a matter of good Republicans versus bad Republicans or good Democrats versus bad Democrats. It doesn't matter who the players are so much if the rules of the game are messed up.
Jay, we've got about a minute left, so you're going to have to be quick about this. But I want to ask, both parties seem to practice, decisive politics. They're dividing public opinion. They're manipulating public opinion instead of, what we said earlier, to seek to build, an honest national consensus. Do you have a solution for them?
Well, I think that the only real solution is outside pressure that's applied. I think that people who draw a professional living off of the political parties like the status quo. They're very well off by the status quo. They get a little slice of power which they're able to use to their own purposes and be financially secure and socially, prominent. And I don't think they want to change. And I think that the only way you really force change on a political system such as ours has to come in some way, shape, manner, or form from the outside.
Thanks, Jay. You've got to get Jay's book. It's at Amazon, A Republic No More, Big Government and the Rise of American Political Corruption. Stay tuned. We're going to be talking about China and gold and how they're going to control it. And we're back. And we're back again, having a little bit technical difficulty there. I don't know if you remember back in September of 2014, I talked about how China actually unveiled this anti-rigging benchmark because there was so much rigging going on with gold. As we know, it started in September of 2011. And they did it to suppress the price of gold and silver in order to make the dollar, the yen, and the euro look and feel stronger, they being the parties that are controlling our markets, the Federal Reserve. So actually, we talked about this China, again, anti-rigging benchmark, and they were going to do it. They said they hadn't done it. And what do you know? This past week, actually, China formally announced that they are going to plan to launch a yuan denominated gold fix this year, and it's going to be set through trading on an exchange. And this is going to be, China actually right now is the world's second biggest bullion consumer. I think this is interesting because they're going to gain a lot more say over the pricing of precious metals. I think they were just so tired of the abuse that was going on with the West and how they controlled the spot price and how they weren't relying on supply and demand. It's going to be interesting to see if they fall into the same trap that we did over here. Hopefully not. But I do think this is actually going to be a positive move for gold. I mean, China's spot gold trade volume is up near 60% this year and growing. And so the fact that they actually set up this yuan, that's their currency, denominated gold fix, that's going to be a way, again, for them to have a lot more control over the gold price. And I'm betting it's going to be a lot more honest, and you're going to see a lot more demand being moved into the gold price. They don't have an actually day and active time that they're going to be doing it, but my understanding is, based on what I've read, it's going to be relatively soon. I say this, owning gold is important. I think, even if it's as a hedge, in the type of world that we're in where fiat currency is not garnering many people's respect and honor. Even our guest this hour talked about how Bitcoin and the electronic currencies are actually gaining a foothold because of what's going on with fiat currency and the type of debt that we have that's destroying our fiat currency and our inability to be able to pay it back. So it's just a very interesting setup, and it's something for us to be watching and something for you to be watching in 2015, this new fix, this new spot price that's actually going to be designed to compete with our spot price or to keep it honest, one of the two. I'm just going to remind everybody as we head to the end of the show, if you're interested in coming to the Stake Seminar, it's this week. It's Thursday night. It's going to be March the 5th. That's 2015, and it's going to be at 7:15 at the Capitol Grill in Chevy Chase, Maryland. And I am going to be talking about the surreal and sinister markets of 2015. So all you need to do is RSVP. Give me a call at 866-286-2268. That's 866-286-2268. And again, because we only have so many chairs because it's dinner. And I do like to keep my groups relatively small so it can be much more intimate. And you can ask questions regarding your portfolio or anything of my team. They're all going to be there. You're going to be able to meet everybody that I've worked with for the last 25 plus years. They're good guys. And as I stated earlier, they're a lot smarter than I am. So you're going to see where my strength comes from and our research comes from. And again, this is a seminar that's taking place on March the 5th, Thursday at 7 p.m. at the Capitol Grill in Chevy Chase, Maryland. And the subject of the seminar is going to be the surreal and sinister markets of 2015, because given the fact that these markets are so controlled by the Federal Reserve and they never allow them to correct or go down, this is just an opportunity for you to be able to get some ideas to prepare yourself or just to better understand what's going on and the truth about the economic numbers so that you are completely educated as to what's going on behind the scenes. And again, if you're interested in coming, give me a call at 866-286-2268. And again, that's 866-286-2268. And you know what? There's not much more, except for the fact I will also want to remind everybody we still are selling gold and silver coins and bars. So if you're interested in that, it's the same number. That's at 866-286-2268. We got into the business because our listeners told us that they were paying such high commission prices, and we don't. We're like at 2.5%. So we try to make it very affordable for you to have gold and silver at home or in your IRA account, or delivered to a bank of your choosing, or a bank. We can actually suggest a top-tier bank for you. So again, if you're interested in gold and silver, that's 866-286-2268. And you know what? This is pretty much all I've got. Looking forward to seeing you at the Stake Seminar this Thursday. And this is Dawn Bennett with Financial Mythbusting, where politics and the economy collide.